Thank you for joining us at XM.com. This is the Daily Market Comment by Mario Sachikiriakos. I'm Christina Marujos. The main event today will be the much-anticipated speech by Fed Chairman Powell at 2 o'clock GMT before the Jackson Hole Symposium. This platform has been used in the past to signal strategy shifts, so market participants will be hanging on his lips for any guidance on the direction of monetary policy. The U.S. economy seems to be shifting into lower gear with business surveys warning of cooling demand, but inflationary pressures are still exceptionally high. The Fed's problem is that markets aren't doing its dirty work. Bond traders are essentially saying the Fed can raise rates all at once this year, but it will still be cutting them next year to deal with some crises. This assumption has been embedded into asset prices, keeping longer-dated yields artificially low and making the Fed's inflation-fighting job harder. Fed officials have been stressing that interest rates will remain elevated for as long as it takes to slay the inflation dragon, even if the economy stalls. If Chairman Powell emphasizes the same point and quells speculation around rate cuts, that could ignite another sell-off in risk assets, but turbocharge the dollar. In currency markets, most major pairs were sticking to familiar ranges as traders seemed hesitant to initiate new positions. Euro-dollar has been stuck below parity all week, meeting fierce resistance every time it attempts to cross above it, thanks to the relentless rally in European natural gas prices, which hit another record high yesterday. The energy shortage is going from bad to worse, stalking fears of stagflation in the Eurozone since this crisis will simultaneously hit consumption and pour gasoline on inflationary pressures. That means the European Central Bank cannot ride to the rescue this time, and European governments have been reluctant to shoulder the burden. Meanwhile, the British energy regulator announced it will increase the cap on electricity by 80% and warned that prices might need to rise much further next year, putting more pressure on struggling households, causing sterling to retreat. Oil prices took some damage on Thursday after the White House said it would agree to a nuclear deal with Iran if it was in America's best interests, feeding speculation of a breakthrough. Even so, crude prices were headed for solid weekly gains. Stock markets came back to life yesterday. The S&P 500 gained 1.4%, and how resolute Chairman Powell is today will determine the next leg. In the big picture, it is difficult to get too optimistic in a regime where the Fed is still on a warpath, the economic data pulse is slowing, and earnings growth cannot keep pace with inflation. This was a Daily Market Comment at XM.com. Have a great weekend.